So welcome everyone. Today's X Space. There reads DePIN Base Camp number 2 for builders by builders. Because today we're gonna be sharing a bit more what's the opportunity for DePIN founders to get into this program that see together. It's bringing together Outlier Ventures, 1KX, and peaq as partner. So today we're gonna be talking all things DePIN, why it matters, what we learned so far, and why this base camp is the best place for founders looking to build in this space. So the reason we're also doing this with this timing is because if you're a DePIN founder, we want to remind you, even if you're thinking about becoming one, this X space is for you. We have applications open for our DePIN Basecamp 2, and they're closing soon. So don't overthink the application. Reach out, see, let us know what you guys building. This is the time to get inside scoop on why this program is game changer, and that's what this X space gonna be about. So joining me today, I'm Rick, the accelerator lead of the DePIN program at Outlier Ventures. Joining me today, we have Martin from peaq. Would you like to share one-liner presentation about you?
Sure. Thank you very much, Rick. Hi, everyone. My name is Martin. I'm head of ecosystem at peaq, and yeah, super happy to have this conversation today with Mikey and with Rick, and very excited.
Awesome. And then we have Mikey from 1KX that will give a bit more of the investor perspective. Mikey, do you want to introduce yourself?
Yeah, hey guys. I currently work at 1KX. It's an investment fund focused on all areas of crypto. We've historically invested in the infra categories, done things like ZK Sync, Wallet Connect, Arweave, Gnosis Safe, and then have also been spending a lot of time in the DePIN sector and have done over 10 investments there. Yeah, looking forward to chatting more.
Awesome. Awesome. All right, let's get started with the question then. We'll start with you, Martin. I remember when our partnership is now almost 1 year long from when we first approached peaq. Peaq has been very central in the pin scene. We ran the first base camp with you guys last year in Q2. So I remember when we got in touch was pre-listing, very exciting time. So my question for you, what was what is your biggest takeaway from that first cohort, that experience? What kind of impact did it have on the ecosystem?
Yeah, very good question. Maybe for context, right? So peaq is a special purpose blockchain focused on DePIN, on the physical AI, and on the machine economy. So basically everything that the world will need at a point when autonomous machines kind of start interacting with one another automatically, accelerated by AI. They obviously need a place to settle. They need a place to collaborate, to exchange value, to transact with one another, and that place is deep. And obviously, when you kind of bootstrap an L1, it's a big, quite holistic challenge. And the essence of what we do, we always like to say our ecosystem is the soul of peaq, right? It's what ultimately is creating the value. It is what is making people use the chain. And so when we kind of started that collaboration back in the day, obviously the goal was to primarily grow the ecosystem that we had. Back then we were like 12 projects, though, maybe 20, depending on from what time you kind of start counting. And we have been in the space for quite a while, right? Like peaq started in a slightly different shape or form, always focused on the machine economy, always focused on like the wider AIoT space. Um, we were basically in a period where we've already learned and understood a lot about what DePINs need, what founders need in the space. And DePIN is special in many ways, and one of these ways is that um, if you look at some of the strongest founders in DePIN, what they bring about is really, really strong industry expertise, right? So either you have founders that really understand the bottlenecks that centralization brings about, let's say from the energy industry, from mobility, from connectivity, and they find solutions leveraging Web3 technologies in order to solve these problems and unlock significant value at scale. And that is obviously not easy, right? So you need a very well-rounded suite of skills, of tools that you can apply in order to build and grow successfully. Because at the end of the day, whenever you are building in Web3 and you have a token, then you need to understand that you are catering to two products, right? You're catering to your actual product, which is, let's say, your DePIN. But then at the moment when you bring a token to the market, then you need to acknowledge that you have also a financial product that you need to be catering to. And these are two entirely fundamental different beasts that you need to manage successfully. And what this program we thought was very special about is that it brings expertise from all of these different layers. It brings expertise from the Web2 space. It brings large enterprises that kind of showcase what it is that they are actually looking for, what it is that they need, where the bottlenecks are, where the majority of the expenses are coming from. So it informs DePINs to build, the founders to build efficiently when it comes to the product side. But then it also brings in the Web3 angle, right? The token economy angle, the fact that we are in a attention economy where we need to cater to a hyper liquid market that is very prone to global macroeconomic developments, very volatile. And that is a place where you can really leverage that skill set. And we started working together. And I think the most beautiful outcome of that first cohort was that I think 4 out of the 6 projects already started building somewhere else. 2 hadn't yet decided where to build, and I'm super happy because now, a couple of months later, all of these projects we're in touch with, 5 of these projects are now peaq native projects and have decided to join the ecosystem. And it really, just to conclude, aligns with our ethos as an ecosystem-centric special purpose layer 1, because the way we support the ecosystem is similar to how the Space Camp is kind of approaching it. We try to support when it comes to the capital side. We very actively leverage our investor alliance to bring in capital to support in the fundraisers. We advise them when it comes to how to prepare, how to set up a pitch deck, how to approach the fundraising, not only from the perspective of the conversations, but also what do you need in order to show growth and traction in a way that is sustainable and in a way that is attractive, while at the same time having various initiatives in place. But I think we'll dive deeper into this. And so in a nutshell, I would say the ethos aligns very well. We had a fantastic experience the last time, and so we are very happy to repeat it this time.
Yeah, that's right. It was good to think at the 1 year mark that we started working together, looking at how much progress we've done. I remember like negotiation where went really quick with you guys because it was an instant match in this partnership. And I feel like it's great to have peaq, Outlier Ventures, 1KX all representing and adding the little piece of knowledge, contributing to this program, getting better and better, incorporating all the learning from the first cohort. I feel like we're just raising the standard every single time. It's great to see how far peaq has got since we we start talking, and exciting to be a part of it. Maybe until you,
A lot has happened for sure, yeah.
yeah. Now onto you, Michael. DePIN has been gaining a lot of traction recently, but I was curious to see what originally got you 1KX interest in the space. What's your thesis in the DePIN space from a venture perspective?
Yeah, so the original 1KX thesis was that token networks were going to essentially disrupt equity models, where there's kind of these value accrual models that go straight to a centralized corporation, and the participants of any sort of equity company, like an Uber user or a driver, they don't get any ownership in the actual company. And so the original idea was that token networks could allow for democratization of value creation and accrual. And so in kind of like tokenized networks, you have things like Aave, let's say, or some other DeFi protocol where users of the network are actually owning it. And part of this has come through ICOs. Part of this has come through airdrops where users can become direct owners of the platform. And this also applies to the DePIN sector. And what makes DePIN particularly interesting is that you can essentially solve the cold start problem by giving non-dollars, and that could be in the form of tokens, or that could be in the form of points. And essentially, by preserving those dollars early on, you can bootstrap a network either on the supply side or the demand side. And the eventual goal is that you can taper those incentives over time as the network effects start kicking in, and these network effects create more of a competitive offering to centralized alternatives. And I think one interesting thing that we've seen recently is that before there was like distribution of live tokens, but now it's more so promise of future tokens, which is particularly interesting because then you can save early on. And what's particularly exciting about DePIN as a sector in general is that it's a perfect use case for crypto because a lot of the, I guess, established physical infrastructure networks in Web 2 are very monopolistic like and have a lot of network effects. And it's a lot harder to, I guess, compete with those conglomerates by giving dollars or starting as a Web 2 company. So I think for us, it's like the crypto angle is very interesting, and preserving those dollars to create network effects early on is very exciting.
Awesome. Yeah, no, I totally agree. I think our thesis interconnected really well. One mention I should do on this program, you will see in the application page in our graphics that this is post web verified. Last year, Jamie from our chairman spent a lot of time thinking through the thesis on how it's evolving on the current landscape, all the impact that this intersection that we have also with AI is bringing into the market, and now we should rethink about investment thesis. And I think DePIN, out of all the narratives, emerged as a key trend also for this market as the infrastructural piece that we need for the landscape that is shaping out. So DePIN is really central to our investment thesis, and I like to see how 1KX fit really well with our thinking. And yeah, once again, peaq. It was great to see from first program how organically the founders that made it into the court decided to build on peaq. That was an instant match of really organic of how much value they found on the tech stack and the ecosystem there. Maybe I'll go back to Martin. I would be curious to hear from him what you would like to see in this new court. What kind of founders project you would be excited to see in the new court now that we're recruiting?
Mm. Yeah, it's a very good question because I'm pretty sure that this inform us about where the market is at the moment. I think in the last cohort we've seen a lot of digital resource networks, which is still the case. We are very interested in specifically the physical resource networks, and one of the key reasons for that is that it's a kind of an essential kind of part of the machine economy vision that we have, and that caters significantly to what Michael just said, where if you read kind of through the information about peaq that you can find online, we always speak about democratizing the abundance of the machine economy. And ultimately, what that means is that you have physical machines creating value autonomously, and that will lead inevitably to kind of a shift in the global labor market structures, where a lot of the value creation is kind of shifting from human labor to automated machine labor. And if this automated machine labor is structured in a way our economy is structured today, then what that means is that people inevitably depend on centralized institutions, maybe nation states, maybe even companies, to provide them with the necessary sources to make a living, simply because they don't participate in the global value creation the way they would if they were kind of doing the actual work. And we see a lot of that actually happening already. There is automized cafes, there is automized vertical farms, there are many things that kind of happen in a very automized way, and AI will be accelerating that significantly. So the impact that all of this has cannot be underestimated. And the vision that we have is that if all of this happens in a decentralized system, in a decentralized economy where there is not one single centralized institution owning the global value creation, then inevitably what that means is that you're democratizing the abundance that this machine economy will create, based on the assumption that these machines and these robots are likely going to be significantly more efficient than humans can be. And to get to your question, we are very, very interested specifically on the physical resource networks. I think that is something that has become increasingly important in the last couple of months. Also seeing that major global enterprises have started eyeing the robotic space, have really started focusing on how value creation by machines can actually happen. And DePIN is really exactly that, right? It doesn't matter if it's ultimately decentralized energy networks, or if it's the decentralized data aggregators, or if it's decentralized protocols that provide access to critical infrastructure. The Uber example is one perfect example, right? These are the things that we are really focusing on and eyeing. But of course, whenever there is very promising digital resource networks, that's also something that is interesting for us. And for us, it's really in terms of the DePINs itself. So let's say front-facing or value-creating kind of part of the value chain. I mean, all of it is value-creating, but what is really used by the end user, that I would say is what is particularly relevant. And then aside of that, everything that can facilitate this, because obviously what we're talking about is a super complex economic layer that needs to function flawlessly, integrations that need to be in place in order to make that happen, along the lines of different kind of vertically integrated elements. And I would say anything that kind of caters towards that vision of what a machine actually needs in order to be able to fully operate, and then the machine itself, the DePIN itself in particular, I think that is what we are focusing on.
Awesome. Yeah, there's a lot of common themes that are emerging. We're seeing a lot of specialization in the pipeline. A lot of you highlighted founders, industry knowledge. I really like the one liner of democratizing the abundance of the machine economy. I feel like we have a role in this like landscape to facilitate that. Each we have our role. Peak as an ecosystem. We from the advisory side of uh, supporting the founders going through the program, improving their investability, and of course, 1KX, a venture partner, uh, allocating the resource correctly. So uh, eventually, I think this is where the great synergies that we like to see in the space to make those very ambitious vision reality. So I'll be curious to dive deeper into 1KX with Mikey around any advice, any insight about how they approach investing in DePIN differently than other crypto sectors. If it's there any key driver that's very specific to the industry or green flags uh, that they see in successful teams.
Yeah, for sure. I think the first and foremost, having relevant industry experience is really important. I think that in DeFi, if you're a builder, then if you came from basically nothing, you could kind of like figure it out along the way. There's a lot less barriers to entry to building in DeFi. Everything's more open source. It's easier to access, and so we've seen a lot of the successful kind of DeFi protocols basically come from founders who had no background in TradFi. I think one good example of this is Stanley from Aave, who used to be a law student. And there's many other examples of this. And I think the GMX guys, came from like real estate. And it's a little bit different in DePIN because one, like you have direct competitors in Web2 that are already very established and compete with you from ground zero. So if you don't have relevant industry experience, in whatever you're building, it's a bit trickier to build like this consumer product that can be competitive with what's already out there. The second thing that I would say is crypto it's like learning a new language, right? The tokenomics angle is part of what makes bootstrapping easier. And I think having a good understanding of how that works and how other protocols have done it in the past is a very important skill, especially in the early days, right? Because you can only basically launch a token once, you can only plan for it once. And so if there's mistakes early on, it's harder to kind of fix as the protocol grows. And these problems could include like inflation problems, like giving too much to the wrong parties, giving too little to the right parties. And so there's a delicate balance. I also think founders tend to underestimate how complicated it is to launch a token. We try to give at least like a 6 months notice to all our portcos before they're launched to actually start planning. There's things like exchange listings and figuring out the right parties. There's PR announcements and many other things. And so spending time in just like the general tokenomics area is like super important. And then the third thing I would say is just having the willingness to just understand and develop the product. I think a lot of founders assume that just because it's on crypto rails and there's like the right tokenomics that incentives will essentially drive PMF, but that's actually opposite from the truth, which is that token incentives only enhance PMF if there is it in the first place. So yeah, I would say those three things: relevant industry experience, the knack for tokenomics, and just like the drive to understand like where PMF is coming from.
Yeah, these are all very, very good points. I would argue that DePIN is perhaps one of the sectors in crypto which is the most difficult to be building in. It's very multidisciplinary. It really requires a strong domain expertise, sector expertise, and what the industry you're trying to disrupt. But that also makes a case of why it's relevant to go through getting the right advisory. Gives a lot of value to accelerator programs like this, getting the right investors on board that can give you the market perspective that you might not have. And of course, building on the right ecosystem where I feel like in the PIN there is a lot of synergies building together. I feel one thing I like about this industry is how much competition there is out there. A lot of teams are understanding that they're stronger, getting together towards the adoption. It's one thing I really like to see in the industry. And we've touched many insightful point regarding tokens. I would argue that in such a vaporwave industry that crypto sometimes can get, especially during bull markets. DePIN is probably one of the trends, the narratives that builds the token with the most utilities. So for investors that are interested in strong token economies is uh, an obvious industry that they want to govern. Um, and we've touched on many interesting point about the difficulty as well to build a strong and sustainable token economy. So I have a question for both to make it a bit more practical, less theoretical. Is there, it's your personal opinion, any project that stands out as great example of utility and execution, something that founders can look to for inspiration. What's your favorite, Martin? What's your favorite project for a great example of token economy?
I'd give that to Michael first. I think I need to be careful. I'm biased.
Okay, Mikey.
Yeah, sorry, my internet was cutting out a bit there. What was the question?
Yeah, is there your personal opinion project that stands out as great example of utility and execution in terms of token, something that we could look at as an inspiration? What we like to see in strong token economy?
Yeah, for sure. I think the problem with attributing success to like any given protocol and trying to replicate that is that there are so many varying factors that have gone into what made a token successful. I would say there's generally like more high level principles that we try to tell teams to follow. So, for example, like the first thing is like inflows and outflows, right? Like you really need to understand those two. So on the outflow side, it's like where are your tokens going? What is the, I guess, sell pressure from those outflows, right? So for example, if you're building some piece of hardware and there's like the supply side and you're rewarding that supply side, it's like how much are they incentivized to actually just like sell in the market? How much are they incentivized to put it back into the ecosystem? And then on the inflow side, it's like value creation, right? So is there some sort of demand side that involves spending the token? Is there a burn mechanism that kind of balances out the supply pressure? So I think having those both being balanced out is really important to creating a sustainable token economy, and that mainly comes from having PMF, right? Because if you have PMF, then the inflows should at some point outweigh the outflows actually, the same way that companies make more revenue than they have costs, or at least the sustainable ones do, right? I think the other thing is making sure, like, while it's while trying to make it easy for everyone to participate in the network, there's still some involvement from the native token level, right? So for example, like if you're only using USDC as payments from the demand side or from the from the user consumption side, then there might be some lost utility there. So having either an abstracted version of USDC payments with like native tokens being used under the hood, or some sort of conversion to native tokens, I think is really important. So I would say high level, it's actually balancing the two, and then actually maybe one more thing is really like hammering down the model like early on. There's obviously some things that you can change later on, such as increasing or reducing the inflation rate. But it's really important to really lay down the foundational model of your token early on, as it relates to the product that you're building.
Martin, any insight for token design?
I couldn't agree more, right? Like I think Michael just touched on like the core challenges when it comes to build a token in DePIN that have to show how the value is ultimately accruing to the token. And I would even, because you said like, do you have a specific example? I think there is multiple examples out there, but it is to an extent early to tell, because ultimately, if we look at DePIN tokens more generally, right? Do they provide access, right? Is there an incentive for, let's say, a large data aggregator to use the native token in order to access, let's say, a certain data set, or in order to access a certain type of service? And then what is the economic value of that service that is being provided? Why is it outperforming, let's say, the existing offering of, let's say, a centralized large-scale Web2 enterprise? Data is a very good example for that, because we know in Web2 that data businesses are actually very, very challenging to sustain, and that the returns on selling data are significantly going down, and it's a continuous downward spiral. So if you are in a kind of operating a token-related data business, then you need to really think about how is the economic value accruing to the token? Where is my competitive advantage to let's say the existing offering in the market, and how do I sustain it and continue to add utility? Because at the end of the day, the token price is derived from a very simple demand and supply equation. Like, is there more demand for my token than there is supply? Can I do something with this token beyond at the end of the day selling it? And when you have, and that is where DePIN is so valuable, but at the same time so challenging. We are not operating within the pure Web3 economy, right? It's not a DeFi protocol where you can offer certain types of yields by locking certain types of assets, and then basically believe that this is going to translate into the actual value of your token, because the value of the token is ultimately derived from willing to pay in order to either hold or use it. And that is where the demand side is so important, and also something that we are very actively focusing on. I think in the next couple of weeks, there will be more announcements around our enterprise adoption program. We are putting a lot of effort in educating our enterprise partners into to understand what the value proposition of DePIN is for their individual business models, how applying deeper business models or purchasing services or data or accessing services or data from DePINs is actually much more efficient in terms of capital and operational expenses compared to the way they are doing it now. But we need to understand that we are still very, very early in that process, and that the maturity and also the quality of the data and the services, it's still being bootstrapped, right? So a lot of what I see at the moment is based off of a promise of a future value, and this is where the token design is challenging, because you need to cater, because your token is live, right? Like, even though you might not be generating revenue that is even close to your market cap or fully diluted valuation, the reason why it's priced the way it's priced is because of a market expectation. And so the challenge really is to unlock that demand side for that token, and to make sure that people buying and using it at scale, or just holding it because they know that from whatever value that you're creating, a lot will actually be funneled back to the token holders. And that is also what we always tell our DePINs, right? Like, when they pitch, when they prepare their business models for the early stage projects primarily, what is the value accrual? How does it look like? Does it make sense? It's I think Michael said it's ultimately about product market fit, and a good token can accelerate a project with a good product market fit. And that is exactly it. If you don't have a product market fit, and it's not only the product itself, it's also the financial product behind your product. And that is why I find it very hard to kind of pick one or two specific examples. I think there are many out there that might have actually found a very good model for their respective case. But again, it's really about the individual case and understanding that it needs to cater to two worlds.
Absolutely, I think you raise good points. The fact that the token discounts, the future expectation about it, I think it has a good effect on founders, because they have to be crystal clear, have in mind what's the end game of their product, and be able to communicate it. So in a way, uh kind of forces you to think through your roadmap moving forward. And the other key insight I
It
got
forces you to.
is, go ahead.
Uh, I was just saying, it forces you to think long term, right? And like, also when we look at who we support, let's say, more actively, and who we kind of enjoy working with particularly, it's those that understand that they are on a journey, understand that you can't just kind of do something and slap a token on it and then believe that it's going to work, and you have a long-term sustainable business. I think the big promise of DePIN is that you can, from an investment perspective, to put it this way, is ultimately the way the success is being measured for let's say the ecosystem and for the VC might differ, but it comes down to the same points. And it's understanding that you are bootstrapping a network with very limited capital resources initially, and in order to make sure that you can build this vision that is capable of actually successfully taking on these existing Web2 giants with all of these network effects and all the user habits that they are used to for years and decades, you need to understand that you're in it for a multi-year journey. And if they have this mindset combined with the actual expertise about the problem that they are solving, particularly founders that have been working in a certain industry for years or decades, that really know the nitty-gritties, that really know how to turn the existing model upside down in a way that is beneficial for, like in classical Web2 terms, for the balance sheet of, let's say, the enterprise, but also for the clients, right, that are ultimately using it. That takes a lot of time, and you need to understand that you need to sustain hype for a relatively long period of time until, let's say, the income and value creation of your token is actually creating a net economic positive. And if founders have this mindset, I think and the knowledge, then I think they are already pretty well set up.
Absolutely, absolutely. And now it's a bit less, but I remember when DePIN was emerging as a trend, sometimes you get that persona of a founder who's a industry expert, maybe no Web3 native. And sometimes you could see in the decks they naively assume they would just replicate Ilium as a business model, copy paste their model. People sometimes, founders with that background, tends to underestimate the importance of tailor made it to your specific economy. And yeah, the other insight you can get is it's not a panacea for uh, for avoiding. It's not a shortcut to not working towards your product market fit, revenue generating. It's a boost that allows you to overcome that barrier to bootstrap it initially. So it's difficult. It's a lot difficult to build in DePIN, and as I mentioned before, it's important to find the right partners on your side uh, to get towards such ambitious end games of the project that we see applying to our programs. And just because the target audience of this space, we mentioned that this is for builders. We want to see founders getting all the right tools to be successful in the journey. Just to give a little bit of behind the scene of what happens in our program, uh, we work in a 3 months long program. It's made out of different sprints. So you, as a founder, there is enough, like you really need something which is tailor made around you. I think that's where Outlier Ventures with the program is outstanding, in a way that you go through your diagnostic phase with all the mentor madness, getting in front of industry experts that really dissect your business, find all the recurring path of some patterns in what we think that could be improved in your model. And then uh, we revisit the tech roadmap together with you. You get a lot of eyes working on your own startup from all different discipline perspective. And finally, one key aspect that we do during the central part of the program is that token sprint, where we do together the uh, token design, starting from designing the value flow in your ecosystem, mapping out your ecosystem, uh, uh, understanding all the mechanics that go into it, then getting into the tokenomics, um, uh, doing token modeling with quantitative simulation, how to pitch your token. So it's a journey to token. It's really detailed, and it's always follow up by one to one with experts. I think that's what a strong DBeam founder is, the kind of support that they need to get to an investable stage, and they can improve. I see teams joining programs, very promising, perfect background for what a great um, founder industry fit, founder market fit, and they can 10x their investability through the program with the right support. So if you guys, if you're a builder, you're building in DePIN, you're listening to this X Space either now or async later. Uh, the recording of this. Um, just one last disclaimer that the application of our base camp in partnership with the peaq, Outlier Ventures, and 1KX. Our applications are open. You find it on outlierventures.io. They're open, but not for long. We're still collecting last weeks of application. Don't overthinking. Share your pitch deck with us. Let us know what you guys building. If you're building in this space and want the backing of Live Ventures 1KX at peak, this is your chance. So, guys, I think we can wrap it up. This has been a great discussion. Um, Thank you, Martin and Mikey, for sharing the insight with us. And thank you, peaq, for hosting the X Space. And thank for all of you for tuning in. Be sure to follow Outlier Ventures, 1KX Network, and peaq Network on X for updates. And we hope to see your application for our program. And stay tuned for the announcement of the teams that will make it into the court.
Thank you very much, Rick.
Thanks, guys.
Thank you, guys. Bye, everyone.